In this video, I'm going to explain how institutions, big banks, and hedge funds actually exploit retail investors and the mechanics and art of their market manipulation. So first of all, if you want your investments to outperform and succeed in today's rigged financial markets, there's a fundamental truth that you need to face and live by. This truth isn't a hidden secret. It's actually in plain sight. And unfortunately, it's something that most people refuse to accept or simply don't understand. So, in this video, I'm actually going to show you and explain exactly how financial institutions and these big players exploit retail investors and how they manipulate your emotions, steer your decisions, and use media outlets and different social media platforms basically to draw you in and position you as their liquidity. And I think once you understand their playbook and really understand this game they play and the deceptive tactics that they deploy, you can stop thinking like the crowd and start thinking like a sophisticated investor, a contrarian who actually understands the game, and really start thinking like smart money so that you're never going to be a victim again in the future. So most people think the crypto market is driven by fundamentals. It's not, okay? It's actually driven by two things only: leverage and emotion. That's what basically moves prices in the real world, especially in the crypto market. And both of them have a short attention span. Now, the people who control those forces, the leverage and the narratives that shape your emotions, are the same people who control the entire market. Plain and simple. That's just the truth. And the players with the biggest pockets, basically those at the top, the hedge funds, the institutions, the venture capitalists, some of these big exchanges, those guys actually wield the most control over the money and the narratives, and therefore they can shape the market in either direction. Now, of course, some of these digital assets and their blockchains will absolutely become more important and more relevant and appreciate in value in the future. A handful of them, or probably even more. Some will reshape finance, global infrastructure, change the way the economy functions, and most of them will actually go bust and go to zero, just like we saw during the dot-com bubble. After it blew up and the dust settled, there were a handful of survivors that actually made it and are still here till today. Now, in crypto, those survivors will be ones with good fundamentals, utility, and real-world use cases. That's what will drive long-term growth potential for the digital assets that do survive when the dust settles. But none of that changes the fact that today's crypto market is still a market, okay? And markets, whether you believe it or not, is irrelevant because markets are manipulated and undeniably shaped by leverage, narrative control, and of course, manipulation. So crypto is essentially, it's still a playground for the rich and for institutions, okay? And market makers and big whales who profit from one thing: exploiting and fooling retail investors and unsophisticated market participants that don't know the game. That's what they make, how they make money off you. So let's start here. How do hedge funds, institutions, VCs, and all these big players actually manipulate retail investors and exploit them? It's simple. They control the information, okay? If you can control the information, you can weaponize it, and that's what they do. So through narrative manipulation, coordinated liquidity games, and precision, okay? Timed media pressure that basically influences retail behavior. Headlines perfectly timed to go out right on schedule. Okay? This is how they operate. So to understand how deep it goes, it's actually critically important to basically understand how easily narratives can move billions by shaping people's emotions. That's the key. Let me show you how far this actually extends with an example. We can look at the clearest example of how easily the market can be controlled and manipulated and act as a ripple effect. So if we look at 2022, this was one of the ugliest bear markets, okay, in crypto history. One tweet from one man, Sam Bankman-Fried. For those who don't know, he was the head of FTX, one of the biggest exchanges. He tweeted liquidity issues. That triggered a global panic, okay? You think that was coincidence? Within minutes, every major outlet blasted it, the same headline, across. Liquidity evaporated, market makers pulled bids, and basically people panic sold, and billions were wiped out within minutes before people even knew what was happening. It happened so fast. And every major outlet or media channel, whether it's a legacy mainstream media or not, they pushed the same script. The language was aggressive, terrifying, perfectly timed, of course, and strategically amplified by the people who call the shots on what information should be pushed out and what information should be withheld. This was all planned out. And of course, the negative messages being reinforced constantly, day after day, only amplified the fear and the selling pressure from panic selling, okay? And everything crashed, retail panic sold, and insiders actually repositioned. And they're positioned before the news all the time. A single narrative moved an entire global asset class in 2022. That moment basically proved something we've already known for a long time, but it showed that most investors, something they don't like to admit, that the crypto market moves first on manipulation, second on emotion. Now, I'm going to explain and talk about the mechanics and the art of manipulation, how they do this. It's kind of like a three-tier structure here, but essentially, this is the part that nobody ever really explains, and the part that big players, whales, institutions pray that the public never figures out, okay? Because once you understand how this machine actually works, their entire strategy becomes ineffective. But nonetheless, they don't care if this information gets out. The same reason 90% of the world doesn't have a six-pack, even though the information's out there. It's because nobody would do anything with it. So they don't care. Here's how it works. There's a supply chain to the market manipulation. And yes, it's a supply chain. It has coordinated structure. It's far more connected than people are willing to believe. And they all collude together. And there's a structure to it. So you have the market makers, okay? You got the venture capital firms and institutions, and hedge funds. You got these big players with big pockets, big money. You got the liquidity providers and the big centralized exchanges like Binance, for example. Now, these players coordinate together far more than anyone wants to admit or than what most people know, okay? Their relationships are transactional, strategic, and deeply intertwined. They all work together to achieve the same agenda, okay? Retail has no idea how tightly this ecosystem really operates behind the curtains. Now, here's the game. First, they position their capital. before the narrative goes public. Then, when they're ready and they've decided together, they call their contacts at the major news networks. Okay? It could be mainstream media or it could be underground media. It doesn't matter. Crypto media outlets, specific newsletters that have mass followings, and even exchange-owned news portals. And the headlines suddenly magically start to appear right at the perfect time, with all these narratives being pushed by these entities at the same time. And these narratives are strategically designed and engineered to reach people in order to drive liquidity. These institutions don't just have more power and capital to basically move markets and manipulate asset prices, although they do that as well, but they actually have control over the information. And if you can control the information, which they do, they can shape people's opinions and control sentiment and basically shape their emotions and therefore engineer liquidity and get the outcome that they're looking for to serve their interest. Okay? They decide what message gets amplified or sent out and when it gets amplified. Okay? And they use that timing to steer sentiment, to shape how people are feeling at a given moment based on certain circumstances, liquidity and behavior. Exactly, they get it exactly when they want it and where they want it to go. As a matter of fact, these institutions also use complex financial instruments to manipulate the market in conjunction with the narrative manipulation. They use futures, perpetual swaps, and derivatives, all to manipulate an asset's effective supply without ever even touching the underlying coin or the cryptocurrency. And they do this while manipulating and pushing out specific narratives. And they manipulate the prices through paper markets, of course. They can suppress the prices. They can trigger cascading liquidations, which is what we're seeing now over the past couple days, and ignite fear with such precision that it just scares the hell out of everybody. And the data is extremely consistent showing that this happens, and that every major crash, the largest holders, the big whales, they always exit early while retail eats the losses. Why is that? It's common sense, but that's not so common. The answer is because the same players engineering the price action are simultaneously pushing the narratives designed to pull retail in as exit liquidity. So they can exit their large orders while you buy at the top before the market declines. Perfect headlines in order to get you coming in, perfect timing, perfect psychological traps, wash trading to create an illusion of volume, and the psychological traps don't stop there. They, as I just said, they use wash trading, which is basically to fabricate volume and demand. And they do this by repeatedly buying an asset and selling the same asset on the other side to create the illusion of volume and momentum. So when retail sees the spike of volume and momentum, they assume, oh, something big is happening, and they rush in and start buying. But in reality, it was a psychological trap. It's a mirage. It was a liquidity trap designed to draw buyers in while the institutions were preparing their sell-off, and then they're exiting. This is a very deceptive and common tactic in the marketplace. Okay? The timing of that, when that occurs, is never accidental. The messaging for these narratives they push out is never random. And the public reaction is always predictable. And the big players, they understand this. They are masters of deception and masters of psychology. And that's why psychologists who play the market should be billionaires by now. But what smart money does is when they want out, they create bullish headlines and they suddenly pop up to attract buyers. When smart money wants in at steep discounts, they orchestrate and push fear narratives to flood the feed, to scare people and force panic sellers so smart money could buy cheap. It's not a conspiracy. I've seen it in my career in banking, and this is exactly how it works. So I'm telling you how it works. And crypto is even easier to do that. And while the crypto was at its lowest after the 2022 crash, we were being told by big institutions that they're stepping back. You had the biggest asset manager on earth, BlackRock, actually filing ETF paperwork later and basically structuring custody deals. While they were telling us that it's a scam, stay away from it, we're not interested in it. See what they did? And the same outlets that swore Bitcoin was going to zero were now working on ETF approvals, okay? Like the same entities. They and JP Morgan and a few other big players, as well as other VCs, venture capitalists, and smart money, were all buying when they were pretending to be against crypto. This is exactly the playbook. Then in 2023, a year later, the narrative magically flipped from negative to bullish. It flipped overnight. The Bitcoin narrative went from worthless risk asset to, I remember they were pushing digital gold, okay? A long-term macro hedge, an institutional play, and all this positive talk 1 year later after they were buying at the lows, which is when we were buying as well. You could check my digital footprint. And the same outlets that spoke poorly of crypto and Bitcoin in general, just crypto, they suddenly resurrected it and praised it. But only after is when retail had already been shaken out, okay? And the smart money was already buying at the bottom, allowing smart money to place their large orders, and get those steep discounts that they're looking for before the next rally up over the year and the coming years. And this was not luck. This was by design. It's not a coincidence. This was strategic. And for them, this is business as usual, okay? Executed by professionals in the space who understand exactly how retail behaves under stressful environments. They understand psychology and human behavior, and markets are an expression of that. They are masters of human psychology, and they exploit retail behavior with these dirty tricks. And that's the real truth there. And honestly, this is one of the reasons why I actually built my financial market intelligence group, because retail constantly is misled by headlines, narratives, deceptive tactics by Wall Street and these major financial institutions, and I really hate to see that. So if you want an extreme informational advantage, consider joining my private group. I actually have limited slots at the moment, and they are closing up soon. Additionally, I do want to mention that if you're looking for a very secure, straightforward crypto platform so that you could buy, sell, and trade cryptocurrency, or even roll over your existing 401k into select quality digital assets with tax advantages, then I highly consider you checking out iTrustCapital. I do use them personally, and they have exceptional customer service, and they have everything that I'm personally looking for. It's a great alternative to add if you already have an exchange. But if not, I highly recommend you take a look at them. Link is in the description. Now, moving on. I do want to mention that what's happening right now in the crypto market is the same playbook. It's the same thing. We've seen this game happen time and time every cycle. So there should be no surprise at this point. Now, in conclusion, the truth is this: you can modernize the market, Okay, you can bring in AI, you can have all these ETFs, and you could have stocks, crypto, new asset classes. It doesn't matter. At the end of the day, you can't modernize and change human nature. Okay, humans are people, and people have emotions, and we're driven by those emotions: fear, greed, hope, ignorance, disbelief. This is what drives every cycle. And just like they did 100 years ago, that's never going to change. And that's exactly why we get extremes of booms and busts throughout all markets, throughout history. And as long as people are people, markets will not change in that regard. Now, of course, they can rebrand things, they can change the market, we could have utility, all this good stuff. But just make no mistake, fundamentals and long-term utility will absolutely matter for specific assets. But at the end of the day, it does not change the dynamics of markets, okay? So now that you have all that information, I hope this can serve you well. And I look forward to seeing all of you soon in the future. I'll be putting out a new video next week. Take care.